Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Drew Zimmerman, derivatives portfolio manager at PI Financial in Vancouver. His websites pifinancial.com and polarfuturesgroup.com. Welcome back to the show, Drew.
Thanks for having me again, Jim.
Drew, most U.S. markets are closing today at all-time highs. It seems the markets aren't worried about any trade issues anymore. What are you seeing?
Yeah, it's been incredible. The last 2 weeks, especially, I would say, there's been a shift to what I call risk on, and that is, investors are willing to sort of ignore any sort of risk and look for returns, put their money to work in equity markets or riskier markets. And I say that in the last 2 weeks is, it was only a little while ago we had a big kind of turn to risk off as the Turkish lira was falling apart, and we were worried if there was going to be some contagion through European banks and so on. So the last couple of weeks of risk on have definitely sort of ignored what I would call, the normal risks that we've sort of been acquainted with in the last little while. And U.S. signing the, possible agreement with Mexico and now putting that in front of Canada, is a positive development, is a move forward in the trade saga, but at the same time, I think too much of the risk is also being ignored. The big deal that the U.S. really needs to work on is the trade deal with China. Canada is, I think, put in very much a sort of take it or leave it position. Maybe some concessions will be made by the United States, but I think more will be looked to be made by the Canadians. So if we get a deal, is it even going to be a good deal for the Canadians? So to see the stock market run higher, and again, it seems to be more of these momentum names, the FANG stocks that are taking us higher on the day today, and again to new all-time highs in the S&P, the NASDAQ, and the Russells. It just shows that I think people are chasing the momentum and downplaying some of the possible negative consequences going forward.
Well, again, if you put it in a GIC, you're not going to make very much, so why not take a chance on a market that's gone up, 22%?
Yeah, I mean, that's been the whole point of the central banks, is how do you lift asset prices, is you force people, out the risk curve, so to speak. So rather than having a GIC where, as you mentioned, you're getting less than inflation, you're going backwards if you hold that. So they have definitely pushed people out the risk curve, out into equities, out into periphery markets. But that's where I, try and keep my antenna up, is to say, the Brazilian real is at all-time lows. Today we had the Argentine peso absolutely crash again, and it at its worst level ever. We've had the Turkish lira also start to sell off again after a week-long holiday. So again, they're not out of the question. The Italian bonds that we got really worried about in May as the Italian political situation was really heating up are also starting to be elevated as people are worried about some Italian risk, especially as they go forward to table their budget. So even though the sort of risk markets that we see and U.S. equity markets are, doing incredibly well, some of the, emerging market periphery markets are still showing some signs of worry, some signs of stress. And even though it's come off the front page in the last 2 weeks, I think that's still a very important thing to keep our eye on. And also in the U.S., the U.S. bond market isn't saying the same thing that the stock market is saying. If stocks are running up, you should see yields running up. That's bonds going lower. They're supposed to trade inversely to one another. But we've got the U.S. 10-year at 2.88. I mean, it had been at 3.11 is sort of our recent high. So people are still wanting to buy bonds, keeping the interest rate lower than it would be if they weren't buying bonds. So, if stocks are so great, why are people buying bonds? And maybe it could be, again, as I look at the risk curve and you say, the U.S. is going to be a very safe place to be. Maybe that includes the equity and bond market, and maybe people are still pulling more money out of the periphery markets, the emerging markets that are showing these, signs of elevated risk in them still. So given that yields are low, they are rising slowly. Maybe the equity market in the United States doesn't look like that bad of a place to be, with the dividend you get on some of the stocks, and of course, in these FANG stocks, the momentum stocks, some serious capital appreciation.
I was just going to ask too about, is there a chance, they call it contagion, that Turkey and Argentina and Venezuela will somehow creep into our system, or are they relatively isolated?
Each one on its own will, stay relatively isolated. But again, as they start to move, they don't move in singular fashion. There's always usually one that is the key headline at any given time. But again, in the background, I would say, the periphery, the maybe extreme periphery and the emerging market, do sort of move in waves together. So in that unison of a move, I think the contagion risk, the, existential risk is definitely there. I think you have it in such a globally intertwined financial system, as we were learning, the number of European banks that had outstanding debts in Turkey, that as the Turkish lira depreciated massively, those debts, were they ever going to be repaid? Are they going to ever be able to be repaid? Even with bailout packages, they've become absolutely gigantic with the devaluation that the currencies had. So I definitely think that there's, plenty of risks that can come back to the United States, whether that's because of a bigger emerging market issue, or again, just as it slowly builds over time. We see that happen in some of the instruments that we have here, whether that's, our bonds continuing to be bought as a safe haven for international players. That's Canadian bonds and American bonds. I think Canadian bonds probably offer a fair level of safety if you're looking at global markets. So the contagion aspect is definitely there. And we look at the emerging markets as sort of, again, singularly, it's okay, but they very rarely tend to move in singular fashion. They most likely will kind of wave together.
Yes, I'm thinking of the Asian currency crisis in the 90s, where they thought it would just stay, in one or two nations, and it ended up hitting Japan severely.
Exactly. Russia defaulted through that period as well. So you have, what always looks like a manageable situation, but the old sort of trader axiom is, there's never just one cockroach. And, the conditions that have been set, and I think you have to go all the way back to the Great Financial Crisis and the central bank response to that, was to really push people out the risk curve. And we've done that for the last decade, 9 years, and the Fed is now going the other way, saying, okay, let's backpedal a little bit, try and normalize is the common language. We've got the ECB trying to embark on the same sort of program by scaling back their bond purchases. So as far as the markets go, my expression has been that, the tinder has been laid by the central bank policies over the last decade. And now, as they're trying to go back and take some of that, excess capital that's being put out into the markets, as they try and reduce that, they're providing sparks. And, as a spark drops on this tinder, we'll see a flare up here, a flare up there. And they never really go out. It flares up and maybe the flame goes out, but there's still, I think, embers burning, to stay with that analogy. And as these little flare-ups happen, eventually the fire just starts. And I think that's what we're looking at is, on the periphery, there is a lot of little coals burning. And as the central bank, the ECB, looking to absolutely stop their bond purchases by the end of this year, I think that is a very big spark that's going to get dropped, on the European continent and the nearby economies that, really aren't ready for it. The, interest rate differentials between countries in Europe are so manipulated. I mean, the Italian 2-year, for example, is still trading under 2.2%, where the U.S. 2-year is closer to 2.7%. And you kind of go, well, isn't that supposed to be a way to tell where the risk is? And you're saying me, there's less risk in Italian 2-year paper than the U.S. 2-year paper? Well, no, because it's been manipulated by the ECB. They're buying Italian paper. So as that comes back, markets have to readjust to more normal market circumstances, and I think that's going to create a big problem. And, we're seeing those little fires, those little sparks be set out in the periphery already.
We'll have more with Drew Zimmerman right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, what impacts are the trade issues having on currencies?
The currencies are always tough to tell. I think, Canada, for example, has been a currency of maybe some optimism going into the recent trade negotiations. This week alone, Canada's, trading back up to levels we haven't seen in a couple of months as optimism floats around with Canada being able to join the recent deal reached by Mexico and the United States. So that will benefit, again, a more risk-averse currency if the trade deal were to go the other way. Obviously, U.S., Mexico, and Canada are very key trading partners for one another. Big part of our economy depends on it. At the same time, I think there's a want to go down the optimistic path, and that may be the higher probability path. However, especially in Canada's case right now in the negotiation, I think the negative consequences to Canada not reaching agreement, or as I mentioned earlier, getting forced into an agreement that, really isn't all that good for Canada in the medium or short term, can, have a much bigger downside impact on the Canadian dollar. So, for example, if we didn't reach an agreement by the end of this week when the Trump administration wants the deal to be done by, he's also talked about, okay, we're going to go ahead and sign the agreement with Mexico, and we will probably slap an extra 25% tariffs on your autos. And that would be a huge blow to the Canadian economy. Obviously, the auto sector, very important. And you have to say, okay, is that actually going to happen, or is that just tough talk to help the NAFTA negotiations that are ongoing this week? It's always hard to tell. But again, I think that downside risk, while maybe a lower probability, would have a much bigger price action in the currency. So it's always hard to say exactly how the currency will react to these deals. And the latest example was the day the Mexican and U.S. officials agreed to a trade agreement. The Mexican peso traded higher. The next day, it was off almost a full cent. And you go, wow, that was a real case of, buy the rumor, sell the news, and the Mexican peso is back doing better today. So maybe that was just a one-day event, but it's always, what was the event? And in currency markets, because it's always a relative game, it was also against what was the expectation of the event that will really move currencies. And that's why I think when you have some of those lower probabilities that do come through, you get the much larger move in the currency markets because the market was not expecting that, and especially if it's a big negative shock as well. So the Canadian dollar, while it's doing better right now, and I hope we get something done on the trade front in the next few days and something that is good for Canada, I'm still skeptical of the Canadian dollar doing better here, and I do think the outside move would be a move lower in the Canadian dollar if things were to fall apart in the next few days.
We'll have more with Drew Zimmerman right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Drew Zimmerman. Drew, marijuana stocks took a huge pop recently when we found out that major liquor companies are now looking at getting involved in the business. They've given up fighting it, and now they want to join it and perhaps take it over even. What's that say for the long term, and could we see initial excitement and then maybe too much produced, or are we going to see a surprise? And I know in the U.S. when the shops opened, their shelves were cleaned out within a few hours.
Yeah, I would say initial excitement is maybe too late. I think we've seen that and then some. Obviously, the big Constellation Brands deal that was done with Canopy really started this recent move higher that's seen a lot of the stocks almost double their price in the past couple of weeks alone. And of course, as other big liquor distributing brands are, known to be sort of circling around and looking at possibilities as well. I mean, Canada has, positioned ourselves at the forefront of this sort of medical and recreational pot movement. We do have the companies trading on our stock exchanges and so forth. So we are definitely at the hub of it, and it will be, something to be seen. I mean, as we go into the fall and as the recreational side becomes, apparent to where the supply and demand is, and again, what is the capacity that, recreational buyers can take in. But then there's also, the different medical sides, and other forms that all the marijuana is taking these days as well. So I think it will definitely be a learning curve. I would say, as you mentioned, the initial excitement is definitely here. It's sort of a market frontier right now. Where is the potential for mixing it with non-alcoholic drinks or maybe even with, although I imagine they'd shy away from that at the moment. But
California's making THC-infused beer.
Yeah.
So there you go.
Exactly. If you can't decide what you want to do, you just do both at the same time. It really is a very entertaining space to watch. I mean, incredibly volatile. I would emphasize that people looking to invest in the space. I mean, you're seeing 10% swings in both directions on a daily basis, and obviously the trend has been up. But when you see companies like this, and you see the biggest market cap in Canopy Growth, being bigger than WestJet and Air Canada market caps put together, you start to question some of the valuations, but at the same time, so many of the big names, even down in the United States, the FANG stocks, a lot of it is, what is going to happen in the future? What are your future earnings? What's the future market? So because a lot of that is still yet to be defined, those numbers are being projected to be incredibly large. So that's where you're seeing some of these valuations really pick up. And again, as, more established brands come in at, these high prices or elevated, market caps, it justifies them, because they think, that makes sense for the business or the direction that they want to take that business in. So while the, excitement has definitely maybe turned into exuberance, it's by no means, done, as far as, markets get overbought and then oversold on the lows. Is it overvalued? Possibly. Does that mean it's, overbought? Maybe, but, it could still double again from here. It's one of those things where markets can really run on, a story that, people get excited about.
Yes, as they might say, sparking up interest. Drew, thank you so much for chatting with us.
Thanks for having me on, Jim.
Our guest has been Drew Zimmerman, Derivatives Portfolio Manager at PI Financial in Vancouver. His website, pifinancial.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Questions can be emailed to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.